Hello, good evening, everybody. Welcome to tonight's webinar presentation. I have a question for you. Have you ever missed the perfect trade because you were watching the wrong chart? Well, tonight you'll meet someone who's built his entire approach to catch more of those setups. And he's joined by John Carter, the inventor of the squeeze, to co-host this special session. Taylor Horton has kept a 73% win rate across his last 100 plus trades, thanks to 20 layers of edge working together before he ever pulls the trigger. Most traders end up chasing mediocre moves. Tonight, you'll see how Taylor spots more opportunities, stays selective, and focuses only on the highest probability trades. So buckle up. VP of Directional Options Strategies, Taylor Horton, alongside John Carter, are here to show you how it's done. Lastly, wanted to let you all know this presentation is absolutely being recorded. No worries if you can't be here for the entire thing. We got your back. We're going to fire you out an email for that recording about, say, an hour or two after the presentation has completed. All right, that takes care of the boring stuff. Let's get into the fun stuff. Take it away, Taylor.
All right, thank you, Daryl. What's up, guys? Let's do a quick sound check here. This is becoming like a weekly tradition for us. 3 weeks, three webinars. So I'll be a little bit lost next Wednesday. We can all meet up at Chili's next Wednesday. How about that? All right, what's up, Lee? What's up, Brock? Thank you. What's up, Marcus, AJ, Yander? All right, guys. So welcome back if you came for the previous two webinars. If you're joining us here for your first time, welcome aboard. And yeah, this will be the last webinar here before the class coming up on Saturday, which will be a great time. We'll talk about the indicators, the squeezes, and of course the live data dashboard. And I know a lot of you guys who have signed up for the class, when we launch that beta version here in a few weeks, think you guys are getting 90 days of access. So that should be fun. But for tonight, we're going to talk some squeezes, and then, probably halfway through the 30-minute mark, we're going to have John Carter jump on JC. I'll make the healthy assumption most of you have heard of JC, the godfather of the squeeze. And yeah, that'll be fun. So let's kick it off here with a little bit of story time. I think I think John made the squeeze back like 20 years ago. And 20 years ago, I was 12 years old. So I wasn't too focused on the squeeze back then. I think at 12, I was trying to become the next Kobe Bryant. But yeah, little did I know at 12 years old, about, 8 or 10 years later, that had pretty much become the entire foundation of my trading. So I think it was August of 2016. I had a mentor call me into his office. He said, "Hey, have you heard of John Carter in the squeeze?" I'm like, "No, I've never heard of John. I never heard of the squeeze." So I check it out. I like it. John seems, he seems like a truthful guy. So I take it for a spin for a few months, and I'm liking it. I'm waking up. I got that one thing to focus on. I'm living that focus life, watching the squeeze. And then came November of 2016. I've got maybe, I don't know, couple months of squeeze trading under my belt. All right, here comes the financial sector, the XLF. Big daily squeeze. I'm thinking to myself, all right, I've got probably 15 squeeze trades under my belt. I got the thing all figured out. I'm going to take a BAT. That's a technical term for a big ass trade. I think I had like a $25,000 account at the time. So for diversification's sake, based on the XLF daily squeeze, I bought don't do this. I think I bought 5,000 bucks worth of Bank of America. I threw some cash at JP Morgan. I bought some Morgan Stanley. I bought some Wells Fargo. I bought the XLF itself. Pretty much put my entire account into the same idea. The squeeze broke out, huge push. And I think in like 2 or 3 days, my 25 grand turned into 50 grand. At that point, you can't tell me anything, right? I've got the game figured out. Look out Wall Street. Here I come. Look out John Carter. I'm on Lamborghini.com. I'm specking out the car. And it's funny how the memory can be selective. I forget what name it was, but sure enough, like clockwork, I think it was maybe like 2, 3, maybe 4 weeks down the road. Here comes another big daily squeeze, right? And again, I've got it all figured out, right? Well, I'm going to take my bigger account, I'm going to put that into the next squeeze. And as the market tends to do, I went from 25 grand to 50 grand back down to about 15 grand. The vicious cycle. But that kind of proved to me, all right, it can work, right? I see John doing it. I join Simpler. I'm seeing guys like Henry doing it. The squeeze can work. As I found out through the you know massive move here in the financials, but I've got to apply some kind of criteria. Wish it was as easy as, all right, I'm going to wake up, I'm going to run the scans, see what John's looking at, see what Henry's looking at. Not as simple as find a squeeze by a squeeze. As I quickly learned. So that kind of kicked off this, 10, 12-year process of really trying to figure out what makes these things tick. Taking things from John, taking things from Henry, different folks in the room, and then just a lot of what I would call reverse engineering. Again, what makes these best, most explosive squeezes tick? What I found through a lot of, we'll call it pain and suffering, it comes down to, for me, 15 different things. And the whole name of the game of the squeeze is calling for timing and direction. For example, we find a daily squeeze in Google. We jump in and buy a call. If the thing's still squeezing 4, 8, 12, 15 weeks down the road, we're not getting paid there. So in the effort of taking a squeeze and calling for timing and direction, which kind of translates to pay me as soon as possible, what I found was there's 15 different things that make for, you're never going to find that guaranteed paycheck. Not every trade will work. But in terms of creating consistency, 15 different things the squeeze has to have. Took that and built the indicators around it. So the term big three, I think I joked last week, I'm a big Celtics fan. Back during their 2008 championship run, their top three players are called the big three. So it's a little bit of an ode to the Celtics, and it also stands for trend, structure, and momentum. So everything I do is basically through the lens of a squeeze, trend, structure, and the momentum. Right, if we're thinking trend, we're thinking, trend is your friend, the bigger picture path of least resistance. You don't fight the trend. If we're talking structure, think of structure like your core. I love lifting weights. I love the big three of weightlifting: deadlift, squat, and bench. You need a strong core. If your core is weak, you put 4 or 5 on your back, it's not going to go too well. So structure is your core, your foundation, your backbone. Momentum is your gas in the tank. So again, I figured out, all right, if I can find that moment in time where we have the squeeze, all right, all the energy is being built up, you got the compression, think very much like a coiled spring. And then I take it through my momentum checklist. I'm checking the structure. Right, how's our core? Do we have a good core? I'm checking structure and trend. If it has the full 15 things, there's my moment in time to jump in, buy that squeeze, call for timing and direction. And what I quickly found was, all right, if there's maybe 12 of the 15, that ain't really going to cut it. If there's maybe 13 or 14 of the 15, that's decent. If I can get the full 15, that creates that consistency. So if we jump to one of our open trades here in the Google, out of curiosity, guys, in the chat here, who's watching the Google right now? Right, if we pull up Google here on the monthly time frame, the thing I love about the squeeze could be the original version, the pro, or my version. By default, if you find the squeeze, it offers some edge. One thing John taught was, or teaches, 70, 80% of the time, you're getting a lot of nothing. They pop it, they dip it, they pop it, they dip it. The other, call it 20, 30% of the time, you're getting that good stuff. We get paid on the good stuff. So, right, for Google here on the monthly chart, if you look at the labels up here, we have green momentum. That leans bullish. We have green structure. That leans bullish. Trend is green. The trend leans bullish. Big three score of 15. We've taken the Google monthly chart. We've checked the entire trend checklist. We're looking at structure, momentum. It's got the full 15. All right, now I can jump in, call for timing and direction. I don't want to buy the Google monthly squeeze today. And then they're maybe trying to pay me, June of next year. Got the big three, have the perfect 15. If I can find that in a squeeze in my book, that makes for an A+ setup. What we found here in my room over the last year and change, if you're, let's call it loose. If you're loose, meaning you're on a scan, you look for that moment in time, Without looking at the market context, the sectors, any kind of relative strength. If you just focus on that one moment in time, we found we're in about a 70% ballpark, 70% win rate ballpark. We've also found if we can get a little bit more selective, what kind of market are we in? Where's the QQQ? Where are the S&Ps? Where's your sector leadership? Where's your stock leadership? If we can add more edge around that one moment in time, then we're closer to like a 78% win rate. But more on that here in a minute. So again, a few basics on the indicators. The main thing here being the squeeze histogram. So let's go look at an example here we'll keep it on Google. The blue dots down there on the histogram, that means on that given time frame you have a squeeze. Again, think compression phase, everything is tightened up. It's a big coiled spring. That's our first heads up. At some point soon, this might be fixing to bust a big move. You're maybe on the verge of the other 20, 30% of the time where things actually make a nice move for you. Blue dot, you're in a squeeze. And then if you have a white or a green arrow, all right, now you've got a squeeze in your full 15, which by definition for us is in A plus setup. That's all we do, guys. Could be a bull market, could be a bear market. We maybe have a 15-minute time frame focus, 30-minute. Could be the gold futures, could be Amazon, Apple. We only take that one moment in time. Day trade, swing trade, big time frame, lower time frame. If you have the white arrow down here on the histogram, you have your squeeze, you have your full 15. It's an A plus setup. But on the white arrow, it offers what I would call a decent entry. And if you think of the variables in terms of your trading, you have the win rate. You also have your average win, average loss. One of my biggest goals here for our next 100 trades, keep everything the same as far as the structure, the trigger. Can we get better entries? The thing about a good entry, you could have 30, 40, 50% win rate and still be profitable. So my goal is, hey, if we can be in that 70+% ballpark on the win rate factor and we're getting better entries, better risk reward, that'll make for a better bottom line. Now, by comparison, looking at Google back here in, I think that was late 23, down there on that squeeze histogram, you now have the green arrow. Green arrow says, hey, I've got your squeeze. You're going through the compression phase, all the energy is being built up. Taking our checklist, great momentum, structure, trend, all the fixings for a push. But on the green arrow, you're finding that moment in time, right at what I think is the sweet spot for the best risk reward. Now, for transparency, and these kinds of things excite me. I can get way better. We jumped in my room and bought Google last week. And you'll notice, right? Squeeze, perfect score. I'm buying it on the white arrow, not the green arrow. And here's the kicker. Everything I like about Google all the way up here, at the breakout point, at the highs, everything I like about it right now, it had back here around $1.70. And the green arrow said, hey, Taylor, pay attention. I've got what you're looking for, and I'm going to give you a great risk reward. So here's the power of that. If you're getting long from, call it $1.75, right, on your first green arrow, squeeze, perfect score, and the entry. Right, if you're long for maybe $1.75, they haven't broken the thing out yet. The squeeze hasn't fired. We're nowhere near the 230, 240 target. The stock's already up 15, 20% in your favor. You're maybe going to catch another what? Another 10, 15 plus in your favor. Where I'm jumping in up here a little bit late on the white arrow, and I'm buying it with half of my size, waiting for a pullback. Green arrow, compression, squeeze, the perfect score, and a great risk reward. So the goal for our previous 100 trades was buy it on the white arrow. Now the goal here for our next 100, buy it on the green arrow. And again, we could have a worse win rate and still be nice and profitable. So a few basics there. You have the labels, and then on the chart here, these color bars are your big three buy and sell signals. Blue is neutral. We avoid blue like the plague. Good example would be maybe the cash QQQ. Qs actually aren't too bad. What about maybe the futures? Yeah, so see the QQQ futures? These labels up here, top right-hand corner, multi-time frame buy and sell triggers. Blue's neutral. Red, you've got a sell trigger. Green, you have a buy trigger. Avoid the blue. You're neutral on the daily, the 4, the 2 hour, the hourly, 30-minute, 15-minute. Neutral's a big lack of edge. By default, I don't get long with anything but a green arrow, and I don't get short with anything but a red arrow. Got the buy and the sell signals. You have the multi-time frame labels, and then I think here on Thinkorswim, my favorites probably got to be these watch list columns. All right, so here's my focus list for tomorrow, and I'm going to show you how I built the focus list with the that top-down approach on the live data dashboard. But we got the monthly column, the weekly, all the way down to the 5-minute. You can add all your favorite time frames. Again, we avoid blue. Blue, not good enough. So if we go look at maybe Amazon here on the hourly time frame, you have the blue B3, and if we pull up Amazon on the hourly, and look, we'll be fair, this leans pretty bullish. You put a gun to my head, yeah, I'm going to buy it, not short it. 13 points, good structure. It's not the full 15. I don't have a white arrow down here, no green arrow. I can't buy it yet. Got to work that level of discipline. What about maybe the SMH here on the monthly time frame? So that one has the darker green A plus. What does that one mean? One of my favorite setups right now. Okay, so on the darker green column, squeeze the perfect score of 15. It makes for an A plus setup. Check the entry. Okay, you don't have the green arrow, you have the white arrow. Can we jump in and buy it up here? We definitely can. We can't cry if the thing has to pull back a healthy 20% back to the buy zone. Right, that coincides with your entry label. If that label is green, you've got to hit the sweet spot. If that label is gray, my preference is I buy off a lower time frame or wait for a pullback. So the ones we're really trying to trade would be, of course, the brighter green A pluses. And right now we have, let's see, so Tesla. We jumped in and bought Tesla back on Monday, and we did that here off of the 2-day time frame. And why did I do that? Compression from the squeeze. And you guys will notice you had your first blue dot on your squeeze back on June 27th. You get through the end of June, you get through July, you roll to the end of August. We don't get the first green candle or green arrow until two bars ago. And again, I don't enjoy the game of, all right, here comes Tesla. I'm getting all giddy. I'm going to load the boat. I'm buying my calls. And then 5 days goes by, 10 days goes by, 15, 20, 30. Then they get around to maybe thinking about paying me. My goal is, can I pull the trigger, get push into a profit as quickly as possible? That requires what? The full 15 and the entry. So great looking squeeze here on Tesla. And then what about maybe the 30-minute here on the SMH? Better yet, your 2-day squeeze here for the SMH. All right, but I checked that one in for tomorrow morning. Granted, you have the gap down coming from NVIDIA, so we can all blame NVIDIA. But at the close, good looking 30-minute squeeze. So again, through trial and error, a lot of pain and suffering. Big trades like the financials, bad trades like the trade that followed the financials. These 15 things I found lead to consistency. And if you read the, you read Mark Douglas's book, Mastering the Trade, that's JC's book. If you read Mark's book, Trading in the Zone, that's where we find our success. You've got the approach, you got the system that offers edge. That edge plays out over the series of a course of trades. So if we can swallow that pill of, all right, it's not going to work every time I take it. And look, it could be Tesla, right? Beautiful 2-day squeeze. The structure's perfect, great uptrend, momentum. You nailed the entry. It can be all of that. It's never, ever going to be a guaranteed paycheck. But if every long we take looks like that, and we do that 25, 50, 100 times in a row, that's where we found here in my room. That's where you create your consistency. So that's where I'm at as far as that moment in time. If I don't have a white or a green arrow, I really shouldn't trade it. I know when I look at my track record, it would strongly agree I shouldn't trade anything else. So that became the moment in time. Squeeze, trend, structure, momentum, A plus setup. If you don't have the full 15, I can't throw my cash at it. So I figured out, hey, for that one given time frame, that one given setup, it's a great checklist. It works out really well. Then kind of came like the light bulb moment. If that could be helpful across one time frame, what if we take maybe my favorite 8 time frames? We take them through the same 15-point checklist. Then we generate, call it a total score. We're looking at the weekly time frame, the 3-day time frame, the daily, the 4 hour, 30 minute. This gives me that bird's eye view, 40,000 foot, 40,000 foot view of things. Take you through 8 different time frames, 15 points on the checklist. At its absolute strongest, we're looking for something with 120 points. Now, I did that for about 2 names. And I'm like, hey, this is great. This is really helpful. I can get that bird's eye view, but it's also taking me like 15, 20 minutes to go through a few names. So then came the idea, all right, what if I take that and turn it into, something like a spreadsheet? I'll do all the math, I'll do all the copy and pasting, the sorting. That can give us a sense of, market-wise, are we bullish or neutral? Are we bearish? Who's my best sector? That became the entire framework, called it around where and how do I go trade a squeeze? Am I buying them? Am I shorting them? Am I doing that in the S&Ps, the Qs? Are we shorting the financials, buying the semiconductors? How do I get that context? So a lot of you guys and gals have seen the spreadsheet here. Oh, come on, spreadsheet. Here we go. This was really helpful. All right, got the indexes here, have the sectors, top 20 bull, top 20 bear. Again, really helpful in terms of where am I looking to find that one moment in time. If there's a name like, make it a little bit bigger for you folks. Easier on the peepers. But maybe I love trading the 30-minute squeeze. Now, what if I stumble across a really good-looking 30-minute squeeze for a long, but it happens to be in the name like VRTX, right? Negative 63 overall, pretty bearish. It's not going to create that consistency. If I can find that really good-looking 15-minute, 30-minute squeeze in, say, Google, right? Google, Amazon, Nvidia, something strong from the top down, that can create more consistency. So indexes, sectors, all the above. This takes them all through that checklist. The issue with this is, one, I got to do it by myself. So on a day like today where I'm not at the office, I can't do all the copying and pasting, the sorting. And then from a spreadsheet standpoint, there's not too much more we can do. I can copy, I can paste, I can slap on some pretty colors. I think the colors are pretty. Then we reached out to a few of our developers here, and I asked them pretty much like, hey, how can we take this and maybe try to make it like 1,000 times better? Can we do something like a live data dashboard where the scores update immediately? Can we have different functions as far as sorting, different filters? This is only the beta version, but I think they've kind of knocked it out of the park here so far. A few of you guys saw this last week. Let's go pull up my new pride and joy. And it's kind of as simple as this does all of the work I can't possibly do. Reason being, to figure out the context of the indexes. How's our Dow Jones? How's the S&Ps? How's the almighty Russell, QQQ? All right, well, there's 5 different tickers. I've got to go through 8 different time frames each. I got to look at 15 different trend, structure, momentum criteria. To just get a sense of the indices, we're looking at 600 different things. I can't consume that much caffeine to figure out the sectors. All right, I want to know, should I be buying gold? Should I be shorting XLP, buying the SMH? We would have to look at 2,160 variables. We ain't got time for that. And then my favorite stocks here, the Big 10 basket, that'd be another 1,200. So just trying to figure out, am I in a bullish or bearish market based on indexes, sectors, and market-leading names? We're sitting there sipping caffeine, going through about 4,000 different variables. We can't do that. This bad boy does it for us. So again, all live data. Things won't change right now. The market is closed. When the market is open, if anything changes, all right, so if something happens here with Lam Research to change the score, that'll flash blue. The score will change immediately. So now from open to close, we're figuring out, all right, how's the indexes? Where's my weakest names? Who's my strongest? How's my Amazons, Nvidias? Very helpful. But all right, a couple basics here. So, all right, my approach is basically top down. What kind of market am I in? In the context of that kind of market, who's my best sectors? Who's the strongest? Who's kind of, as the kids would say, mid? Who are the weakest of the bunch? And then I'm going through the Big Ten basket, going through top 20 bull, top 20 bear. So this little section right here, right? Market bullish. This is taking the collective scores for all the indexes, all of the sectors, all of your Big Ten basket. All right, so right now, your collective sectors, they are at 54% of their strongest possible collective score. That leans bullish. The Big Ten basket, these guys down here, right now, they are at a collective 60%. That leans bullish. The indexes are at a collective 86%. That leans bullish. Take all that, do the math. We have a total score of 67% of the best possible score. That's great context. What am I not going to do in that kind of market? I'm not going to try to go short anything. Yeah, maybe a quick day trade, maybe a scalp. Market bullish. The bigger, the easier plate of opportunity, it'll be on the buy side. So by default, I'm not thinking too much about, yeah, I've got to go short Keurig Dr. Pepper. I've got to go short UMP. I'm thinking way more. Can I go buy some Lam Research, Boeing, O'Reilly, Raytheon, Nvidia, all the above? That's been huge as far as our overall success and win rate. If this goes from say bullish to neutral, we're taking our foot off the gas. We're not in a big rush. We're not in a big rush to get short, get long. We're just taking a breather, letting things settle down. We wake up tomorrow, everything has changed, and this says market bearish. I'm not going to go out there and get long. Following the board. Right, then we have the indices. So tonight's rankings, we have the Dow Jones followed by the S&Ps, IWM, RSP, and the Q-tip, all of which lean bullish. And then sectors-wise, we're looking at gold, the SMH, financials, XLY, and all the way down to XLP. Your bad boys being XLP and Bitcoin. All right, so again, they've taken the XLP, they've taken it through 8 different time frames. Top to bottom point of view, 15 criteria. Right now, you have a negative 30. Is it as bearish as possible? No, not really, but I'm definitely not going to buy that. I'd rather buy a gold with 83 out of 120 or some Dow Jones, SMH, all the above. Okay, so this is cool, right? I can do my index and sector context. And for example, tonight I am liking, let's see. Here we go. So I am liking gold. So I'm going to right click on gold, add that to my focus list. Right? It'll slap that bad boy over here. Now I've got gold put aside. I'm also going to grab some of the SMH, right? Good, respectable score. We'll grab some financials and we'll add some of the XLY to the watch list. All right, so there's our 4, call it strongest sectors. And then what about the Big Ten basket? I'm going to go add some Amazon, 88%. We'll grab some Apple. We'll take a little bit of that Google. We'll take some Tesla, and we'll hold off on Nvidia till tomorrow. Now that focus watch list, only I can control that. Those are my personal picks. When you guys who are taking the class get your you get your beta version here in a few weeks, you can right click. You can then select add to my watch list. And that'll be only your watch list. Only you can add to it. Only you can take names off. I can't touch it. We can't change it on the back end. That is yours and yours only. All right, but now where do I go from here? I have the context of I'm in a bull market. Until that picture changes, I want to focus on the buy side exclusively. I've got the rankings here of the indices and sectors wise. I'm liking gold, the chips, financials, XLY, and then now where do we cut it off, right? Because a lot of things look pretty good here. I want to be picky, so maybe I go to the strength tab and I say, all right, only show me things here with a 70% or better. We've got standards around here. Okay, cool. Now I've narrowed it down to XLK all the way up to GLD. That can be helpful. All right, from there, I want to go from the home tab to our main list. Okay, now on the main, the all tab here, right now our database is about 200 stocks. When we launch the beta version here in a few weeks, I think we're bumping into closer to 3,000. And I'm pretty sure they can add pretty much every ticker. So if it's not in the 3,000, we can add it for you. But again, I don't want to go through 193 different names. So I'm going to go up here on the entire universe and say, all right, show me everything with 70% or better. That knocked us down from 193 to 58. But my goal is what? All right. Indexes, sectors, then the stocks. We have the context tonight of gold looking pretty good, semis, XLY, all the above. So two things I can do here. I can go to the sector tab. I can click that and I can say, all right, only show me things in the consumer groups. Financials look pretty good. Only show me the financials and then throw in some of the technology for me. That's one way I can narrow it down as far as that top-down approach. Even better, that tab right here, sector strength, that'll show you as of today's close your strongest stocks in your best ranked sectors. Again, doing a lot of that heavy lifting for us. So I jump to the sector strength tab. Tonight kind of dominated by let me do that. All right, there we go. So tonight we have a lot of technology and well, yeah, it's a bit of a technology block party. But I don't care about a TTD. I don't care about Adobe. So again, show me. I'm going to get even pickier here. Only show me things with 75% or better. Thank you very much. And yeah, Apple, AT&T got the SMH. So that one tab right there, sector strength, that's very helpful. Here's the other cool thing. Say maybe you're more of a day trader. Your favorite time frame for a squeeze is maybe a 30-minute time frame. You can come in here to the entire universe and say, all right, only show me 30-minute charts with a 14 or better. All right, nothing but the strongest 30-minute charts. And then to add to my criteria, I only want to jump in and buy a good-looking 30-minute with a really good-looking daily chart behind it. So therefore, only show me daily charts with a positive 14 or better. Your focus for tomorrow just became three names: GD, Gold, and Boeing. Now, if I do that, what's my next goal from there? I want to find the squeeze. So the guys are working on for the beta version, basically taking the Thinkorswim watches columns. And for a lot of y'all who are on TradingView, Tasty Trades, other platforms, this will solve that issue. We're taking that, making it its own page. That'll spit back in real time who has a squeeze, what time frame, and what kind of squeeze. Is it just okay, kind of neutral? Is it picture perfect, A plus, all the above? So in like 5 or 10 minutes, you can do all the work of what kind of market am I in? Start with the indexes, get my sector context, build out the watch list, then point me towards the best looking squeezes possible. All right, a lot of things you can do there with the filters, and then the A plus squeezes tab. When we launch that beta version, that'll be your real-time A plus squeeze dashboard. All right, and you can get picky. All right, I'm bullish, and I'm only going to buy an A plus squeeze if the weekly chart has a score of 10 points or better. Now I got my watch list. The other great thing, guys, for those of you taking the class, you're getting 90 days of access. Anything you can possibly think of. You want different pre-built filters. You want different time frames. Anything you can think of. Email it to me. Email it to the folks here at the team. We'll push out to the developers. They can pretty much do it all. So anything y'all can think of, we're here for it. But yeah, so that's just kind of a sneak peek of the dashboard. And again, that's just the initial beta version. I think in terms of what we can do, this is like elementary school. And we're going to keep it going from there. But like I mentioned, this does everything I can't do within a reasonable amount of time. I can't check off 600 things for the indexes. I can't check off the 2,000 things for the sectors. And then better yet, when we bump up the universe to 3,000 plus stocks, I'm not sure what the math is there. I can't do that either. So very excited. I think this will be really helpful. And what I'll do here later is we'll kind of go through my process of, all right, I like gold, I like the SMH. We'll look for a few squeezes, but as I mentioned, we'll have John jump on here. And John, I'm kind of curious in terms of, maybe two different points of view here with the dashboard. One being if you could go back, say 15, 20, 25 years ago, how could something like this maybe streamline your success? And then maybe another point of view would be at the point you're currently at in your life, your career, how could this maybe simplify the process and say, all right, if I'm going to find a big trade, I'm going to look at the indexes, sectors, and that'll kind of point me towards where the focus should be. As you're walking kangaroos and all those great things.
No, it's a great question. I mean, I was kind of joking earlier. I think you were asking me about this, and I was kind of like, and I kind of joked because I went through and I see Steve just saying, finally, JC will be able to go to TradeStation for real. I mean, the reason I keep TradeStation right now is because it has a radar screen and it allows me to kind of go through at least some of the biggest stocks that are out there. But it still takes a lot of time and a lot of work, and it's really only looking at the daily chart. I'm not able to rank it the way you're doing. I'm not able to, and I was just kind of looking through it, just playing around with it. I'm like, oh my gosh, I mean, GD looks amazing. ORLY looks amazing. ROST looks amazing. And there's these stocks that are setting up that are just kind of like, they're literally stocks I never would have seen. So to answer your question, if I think back to the amount of hours, thousands of hours I've spent looking at charts and having something like this, the two things that really stand out is one, saved time, especially evenings and weekends. But two, I would say there's probably a lot of squeezes that I've taken over the years. Well, no, I'm not probably. They're absolutely squeezes I've taken over the years that were absolutely not the best choice. And maybe they worked. It's like, okay, yeah, that one was good. But there was a diamond in the rough sitting off to the side that I just never thought to look at. And good examples of those are so like clothing stores. Some clothing stores have had recent really great tears. I tend to think in terms of like, well, if a stock's going to move, it has to be a tech stock. Well, that absolutely narrows kind of my window, and I'll miss some of the rotations if I get really caught up on like, okay, like what's Tesla doing? And of course, at the end of the day, it's not only about looking for a high probabilistic opportunity, but also expanding the range of where you think that can happen. And what's great about something like this is that it really strips away any prejudices you have of where you think that should be and actually shows you where it will be, where it could be. And so, I mean, kudos to you for thinking through this, because I know you've been putting it together and putting it in a Google Sheets and a lot of work. And I've actually been looking at that. But to come up with a concept like this, where not only are you saving time, but you're kind of putting on a platter like, look, there's a lot of potential trades out there. And yeah, you're going to be reading headlines. The one thing I found with the squeeze that I really appreciate is that it really defies headlines. And, the setup is the setup. And this just kind of brings the best of the opportunities where you get this high probabilistic moment in time where a stock can have a greater than expected move and is put it right in front of your face. And from a trading perspective, I mean, I really like the idea. I mean, you mentioned earlier, like saving time, being able to walk with kangaroos. And look, I love trading. It doesn't mean I want to be in front of the markets, every second of every trading day and making sure I'm trying to catch every tick. My favorite trades are, I found this thing on Monday and I put some money into it. And then I checked it on Thursday and, wow, my target was hit for 100%. Give me that all day long. Like, you don't have to sit there staring at the markets to justify the money that you make. It's more about being able to be patient and identify the opportunities that are setting up that you probably never would have seen beforehand. And then, putting your money on the line at that point. And so that's the kind of stuff that to me gets me excited. So to me, I mean, look, I've been doing this a long time. this opens up possibilities for me that before I would have missed. So kudos to you for putting this together. I love that you kind of took something that really changed my life in terms of trading and essentially added some stuff to it that makes it a better tool. And so I'm just excited to use the thing that you created. So I think that's awesome. And I think the people that are here are super lucky to have that opportunity.
Yeah, awesome stuff, man. I think I owe you a few, so hopefully you can take in and find a few good trades. One thing I did want to ask you about was when was your big Google trade?
So that was, gosh, I believe March of 2021.
All right, March of 21. Yes, if you guys at home remember, I think John made about 5 million in change on Google. And I think I made about
it was the
12
most
grand.
painful trade I've ever been in because for 3.5 weeks, it was losing money.
Yes, so that's the thing I want to touch on because where I've seen you really take big size is kind of those, call it stars of aligned moments. Right? You've got the indexes behind it, you have the sectors, XLK, SMH, then the individual stocks. So could you touch a little bit on just the journey of that Google trade and when things actually finally started to move in your favor? Like what, 3 weeks after you took the trade?
Yeah, so you can look at the consolidation, the lower left of your screen there, with the blue bars. That was the thing. So I got in there on that first test of the 21 EMA. I'm assuming that's the 21 EMA.
Yep.
And you'll note here that that's a daily chart. Now, the reason I remember this so well is there's three factors. One, it turned out to be the biggest trade of my career. Two, I put this trade on before I went on spring break, which is typically a no-no. It's like, but I like the setup so much that I'm like, I got to at least have some exposure to this. And then three, the day when I was managing my trade, we had some disaster here out in Wimberley. We have this ranch. We were getting some zebras delivered. The zebras startled our horses, and one of the horses broke its leg, and we had to put it down. And this was all happening while Google finally broke out. And I'm in the room and I'm just like, sorry guys, I have to go, I have to go sit with the vet and put down this horse that we really love. And so I remember all this because it was just such a weird, all these weird things were happening. But the main thing I want to point out on this is that, so, the NASDAQ during this time was negative. Like it was well below its 21 EMA. It was kind of forming a bottom. And so when I saw Google, it's like, okay, Google's got a squeeze. The market isn't great. Typically what you're looking for is you want like the market to be, you're looking for, but what I looked at this is like like Microsoft, Amazon, they were all down with the market well below their 21 EMA, but Google was not. Google was holding up. I'm like, okay, well, obviously at some point, NASDAQ's not going to zero. It's forming a bottoming pattern. And when the NASDAQ turns, Google could lead the way here. Now, keep in mind, when you're looking at Google here, you're seeing a $100 stock. This was pre-split. So it was a $2,000 stock at this point. So during this time, we started off, buying some calls, buying some call debit spreads, selling some put credit spreads. And you'll notice there that you'd have some big moves and you come back to the 21 EMA, you'd have some big moves up, it comes back to the 21 EMA, and this goes on and on and on. And typically when you get into a trade, you're like, okay, 5-6 days, give me some consolidation. Let's see if this thing can break out. And you can see here, I was in it for 3 weeks and I was just losing money. And then finally the squeeze fired. And you can see that within the course of, and the move here doesn't do it justice because you see it go from about 100, to 110. But the move, remember, this was, before the 20-for-1 split. So I believe it was like from 2000 to 2,150, something like that. It was a huge move. But all these, $100 wide out of the money call debit spreads I had went in the money. Some of these I bought for 9 and sold them at 80. And so it just turned out to be a really phenomenal trade. And so, some of the lessons learned there, especially with the squeeze, is that the squeeze is a really solid setup. And you just have to understand when the reasons that you get into a trade are no longer true. One of the things I like about the tool that you have is you have all these additional strength scores. So while I'm looking at this going like, well, the 21 period moving average is essentially holding. I mean, yeah, you had a daily close below it. My rule is if you get 2 daily closes below it and each one's a lower low, that's the kind of the time you cut it loose. And it never happened. So it's like, okay, so what are the things that we look at here? And then the whole point of is like the squeeze is still valid. The squeeze is still valid. We're waiting for it to fire. And it was tough because not only did, I had people in the room that were cutting it loose, like, John, what are you smoking? And then it just turned out to be this huge win. And so, there's lessons learned in that, of course, but I mean, I think the main thing is just realizing, and I'm of course a huge fan of Mark Douglas, but the idea that if you've got 20, if you've got a trade that gives you an edge and you got 25 trades in a row, and let's say the edge is 78%, that means that some of those trades are not going to work. And the one thing is you have 25 trades in a row, you will never know ever, ever, ever which one of those trades is the one that's not going to work. So what I always have found is that if you have, especially tools like this that rate the strength and things like that, it kind of gives you the confidence to hold through the uncertainty. And that's what gets most traders. It's like, oh, it's not working. I feel bad. I feel anxious. And so in order to get rid of these anxious feelings, I'm going to sell. And people did that on the Google trade. And then they kicked themselves because it probably would have been like the biggest trade in their career as well. And so I just think that's really important. So what I like about kind of these tools that you've put together is it helps you hold on to things that aren't working out right away. And I think as a trader, that's probably the biggest journey that someone has to undergo is when something you get into and it's not working out right away, how do you know whether to give it more time? How do you know that this is something that's worth sitting through, even though you're absolutely not guaranteed that this one's not going to work? It could absolutely be one of the ones that doesn't work. And so anyway, with all that, I think it's important to have tools that just give you the confidence to hold on and be patient. I can't tell you how many times, probably also some of the biggest trades that I've had are trades because two things that'll happen. One, I'll see a setup that I like. And so I put in a limit order, I call it fishing, like at the 21 EMA squeeze, blah, 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 blah. I'm just going to put in a limit order at the 21 EMA for this option. I forget about it. 2 weeks later, boom, it hits, turns into a great trade. And then the other one too, where I found this because kind of like Nicholas Darvis, how I made 2 million in the markets. I started trading when I was working in corporate America. So it was on the West Coast. So I'd put trades on in the morning, but then I really didn't know what was going to happen until after the close. This was before cell phones and things like that. And of course there were trades that didn't work and it was like, oh, that didn't work out so good. But there were trades that were fantastic because it was like, I wasn't watching them and I just let them play out. And so I think that what I like about the tool that you put together is it helps identify the best potential setups that are coming up, and then B, gives you the confidence to hold on. And even though we know it's not going to 100% going to work, but if you've got odds of 78, 79, 80% success, it gives you the confidence not to get shaken out. And I think that's the biggest thing I see with traders is that, after 3 or 4 days, they're like, oh God, I don't like feeling like this anymore. I don't like how I'm feeling. So I'm going to cut it loose, which has absolutely nothing to do with the trade. And they end up missing out on a huge trade. So I think that, all this, the Google trade was certainly you learn a lot about yourself holding through something like that. But then also I think the lesson learned is just being able to have the confidence to, to hold through things that aren't necessarily working out for you right away.
Awesome stuff. So one more question for you, because the idea of that big trade, you have the alignment, the stars have aligned. We all love that. What do you do when you don't have that, though? Do you not trade? Do you go to more of a day trade mode?
Yeah. Okay. So it's a good question. And I go back and forth on this because what's nice about like 0DTE SPX is you can always throw on a spread for income. I have mixed feelings on that because while I like it and I'll do it, it gets also an easy distraction. Mm-hmm. And the most money you're going to make trading are with things that are setting up squeezes on larger time frames. You're able to take a position and you're able to hold on. And I think at the end of the day, what really makes sense, and even if it's setting up 2 accounts, you have one account, maybe it's for income, maybe you're doing day trade, 0DTE. And I don't mean this in a derogatory or insulting way, but that's kind of the chump change. That's your rent money, that's your mortgage money. The big trades that you're going to make, and lunch money is great. I got zebras to feed. I need, I'm looking for that as well. But the trades that you're going to actually say like, wow, that actually made an impact to my life, that made an impact to my account balance. That's going to be something where, you catch a meaningful move, and especially with options, and for a longer duration. And so sometimes the art of just holding on to that trade and understanding that, and that kind of only happens if you have really a lot of confidence in the trade. And so I think where the tool here really shines is that you kind of have the cream of the crop here to work with. And that means that there's a lot of stuff out there that you just kind of ignore, and which I think is the right answer.
Awesome stuff. Well, JC, thank you, man. Thank you for laying the foundation. How many kangaroos now?
So we started off with 3. We did not neuter our male kangaroo, and we still haven't. His name's Tyson. He's now 6.5 feet tall. So now we have 12 kangaroos, and we got a problem. So we're trying to figure out what to do.
I've got some land here in Massachusetts if you want to ship a couple over.
Sure. Yeah. I mean, you can have 3. I'll send them tonight.
Sounds good. All right, JC, we'll let you go. Thank you, man. Much appreciated.
Yeah, and thanks for putting this together. I mean, I kudos to you for kind of looking at this from a new angle and putting together a. I mean, it's a tool I'll be using, and I'm looking forward to any other developments that come out of it.
Awesome, man. Well, thank you for giving me a platform to do it.
For sure.
One quick thing here, guys. So he was talking about that Google trade where he's kind of sitting there, suffering for 2-3 weeks, and the thing finally goes. So granted, not as cool as a $5 million trade, but when I had my first 6-figure month back in December of last year, it had that stars have aligned theme. All right, so one trade was the Apple weekly squeeze, which you guys will see here where the tool was a butte. All right, so here comes Apple. You got the green arrow, the scores, everything you want to call for. But if we go look at maybe the QQQ during the same time. All right, here's your index with just as good of a weekly squeeze. Here's maybe Amazon. All right, one of Apple's brothers or sisters. All right, perfect big weekly squeeze. I think there was Netflix. Netflix got going a little bit early. So yeah, I do think big in terms of, like I call it Chili's money. So one thing I'm doing lately for Chili's money is, 0 day to expiration, futures trades, 15-minute charts on the NQES, and then things like, say, a Google monthly squeeze. If I can get the ideal entry, that's more so, all right, I'm going to scale into a bigger size, make sure I've got the market behind me, the sectors. Again, like John says, certain trades will really matter. Grow the account, move the ball forward, all of those beautiful things. But all right, guys, let me see. It is 8:50, so I do want to go through a few more charts here, give you a few of my favorite picks for next couple of days, maybe next couple of months. But yeah, so awesome stuff here. And real quick, a couple of slides for the Saturday class. And then if y'all have any questions or anything y'all want to look at, put it in the chat. And I've got you covered. All right, let me get this puppy going. Yeah, I got to get me a kangaroo. When do you know you've made it? When you got the kangaroo. But all right, guys, a couple of things here for the Saturday class. Now, if you have the indicators from last year or previously, all right, pay attention here, important stuff. If you have the indicators, make sure you log into the website. You should see a special offer. If you don't see a special offer, you can give the customer support folks here a call, shoot them an email. But yeah, if you have them from previously, special offer for you guys. Now, for the rest of you, for those of you who are members of either my room, could be the main room, could be any of the rooms here, you have the basic package and the pro package. So basic package, that's all of your indicators. Right? Big 3 squeeze histogram, the buy and the sell triggers, the arrows, the multi-time frame labels, you get the scans, you get, of course, the thinkorswim watch list columns, which we are going to move over to the dashboard here sometime soon. But you get all of that, and you also get access to the class coming up here on Saturday. Now, the pro package for $897, you get all the indicators. You get the access to the Saturday class. You also get quarterly access here to my mastery. I'll show you guys here the schedule for my room here in a minute. But with that pro package, when we launch the beta version of the dashboard in a few weeks, y'all are getting that for 90 days. And again, I want to make that really a group project. I'll keep on saying it. Anything you guys can think of, different time frames, different stocks, criteria, filters, anything you can possibly think of, throw it at me. I'll pass it back here to the team, and we'll try to make it. We'll try to make it happen for you. So again, basic package, it'll be all the indicators and the class here on Saturday. That's 447, and then the pro package for 897. The indicators, the class, quarterly access to the mastery, and 90 days of beta version, beta access to the upcoming dashboard. And then lastly, for those of you who are not members, the basic package is 497. The class, all the indicators, the pro package would be the indicators of class, the quarterly access to the mastery, and then of course the access to the dashboard. And I think I mentioned last week, we're going to bump up the frequency of the sessions in my room for the next probably foreseeable future. But in my room right now, here's a current schedule. I'm on the mic on Saturdays, 9 o'clock Eastern. That's our weekend prep session. And now our weekend prep session just got like 100 times easier. Pull up the dashboard. Is the market bullish, bearish, neutral? We thinking about buying some QQQ, shorting some Dow Jones? Is it the SMH, healthcare? We do what the board says. Prep sessions on Saturdays. I'm on the mic for the open on Mondays and Wednesdays. Also on the mic in the afternoon on Tuesdays and Thursdays. And yeah, I'm thinking since we're launching the dashboard, we should maybe do a bonus session every Friday. We can make it an open and maybe make it a close. I'll let you guys pick here in the room. But there's your schedule, and if you want more information, you can call the support team here, shoot them an email at support@simplertrading.com. And then lastly, we have the interest-free payments from PayPal credit. So pick the course you want, put it in your cart, and you can apply for a line of credit through the PayPal with 0% interest for 6 months. But all right, guys, give me maybe 5 more minutes of your time. I want to kind of in rapid fire fashion go through, what'll now be my nightly/morning process. We'll do that real quick. We'll give you a couple of watch list picks for tomorrow, and then any questions you got, put it in the chat, and I will get caught up with you. But all right, so let's kind of go through here rapid fire. We've done a little bit of the work already. Bullish, bearish, neutral. We're in a bullish market. So probabilities-wise, I think the bigger, easier plate of opportunity until things change, it'll be on the buy side. We've had a running joke in the room for the last 20 weeks. The best buy signal in this market is a sell signal. Meaning you'll get a little flush, they'll pull it back. They can never get the board to flip bearish. The bulls will giggle and they'll pop it right back up. But all right, we're in a bull market. We have the Dow Jones followed by the S&Ps, the Russell, the RSP, and the Q. I mean, really, you kind of got to like all the indexes. And then we said we're liking gold, the SMH, financials, and the XLY. All right, we think we can then go to the main list. And then take things a step further, go to the sector strength tab. All right, now show me the best names in the best sectors. And I want to be a picky fella. So show me and my friends things with only a 70% or better. Thank you very much. All right, let's go grab some. We'll add some NVIDIA. We might already have it. Thank you, thank you. We will add some XLK. And I think we have the Google, but we'll add a little bit of Google. Can never have too much Google. All right, now that focus list we just built, it's not based on, hey, I like these stocks, I like these companies, I think they look good, I think they're bullish, What I think is, at this point, pretty close to useless. What does the dashboard say? Dashboard says gold, the SMH, Amazon financials, XLY, Apple, Google, XLK, Tesla, and NVIDIA. They are in an overall bull market. They're part of your strongest sectors. By themselves, they rank out pretty damn good. Do that work. Now our next goal is what? Go find that green arrow. So if we go look at a few of these puppies here, right? GLD, the SMH, the financials, all the above. Again, by default, gravitate towards the brighter green. Right now, NVIDIA off of the daily squeeze. NVIDIA's down to about $1.76 here. Does it lean bullish? Is it more bullish than bearish? Yeah, sure. but it's only 13 points, not 15. Let's go jump to the 2-day squeeze here for Tesla. Now, here's what I found. If you can find that moment of time on one time frame, that's pretty solid. When they give it to you in the right market, in the right sector on multiple time frames, those are going to be your best trades. So right now, Google, we have the green arrow here on that 2-day squeeze. Nice squeeze, checks all the boxes, all the criteria. Your upside target's closer to 385. Here's the kicker, though. If they can get a green arrow on the 3-day squeeze, so here's your nested squeeze dynamic. If they can get one here on the 3-day squeeze, the target on that is closer to 400. If they can get the trigger on the weekly squeeze, then we're talking about a $420 target. There's your benefit of the multi-time frame setup. We're finding it nice and early, right? We're wrong under, called it 320. We're wrong about $30 lower. Our target sits about 70, $80 higher. So there's just not focusing on the squeeze right criteria and the entry. So I am definitely liking Tesla. What about maybe Goldman? Now, Goldman has a darker green A+. We'll talk a lot more about this in the class. We can buy them without the green arrow. There's just some considerations. This will be a beautiful 2-day squeeze down to about 715. If I'm back here buying it on the green arrow, I've already got some cushion. I jump in, buy it up here on the white arrow around 750. Yeah, it maybe pulls back a quick 5%. Won't change too much. So that determines, position sizing, time till expiration, structure of the trade, all those fun things. Couple more here, guys. We'll see what's up here tomorrow with NVIDIA. Until things change in a big fashion, I think in terms of Q4, I'm loving the SMH here. We have the white arrow squeeze here on the monthly. Checks all your boxes. Even better, we have the squeeze here on the 2-day time frame. And I'm thinking with a bit of a gap down tomorrow, that might go ahead and trigger the green arrow. Better entry. We have a daily squeeze setting up. Now here's the kicker. I love the trade, the SMH. If tomorrow through December, we've got the board saying, yeah, don't touch it. The SMH is down here, top or bottom 2 or 3. These things won't work. But if we get through the end of August, we roll through September, October, and you have that consistency of, yeah, you've got the SMH there, top 1, 2, 3, 4. That very strongly points towards, with time, they do want to break out those squeezes and try to fire them long. That translates to, if I can find them on a good entry, that can make for a nice paycheck down the road. But all right, guys, awesome stuff here. So yeah, anything y'all want to talk about, any questions, any charts you want to look at, we'll hang out for maybe another 10, 15. But yeah, very excited for the Saturday class. And then, I mean, look, our next 100 trades should be better than our last. Better focus on the entries, better focus on alignment. Less trades like, it's kind of like saying Lord Voldemort's name. Less trades like Keurig, Dr. Pepper. My bad, not Keurig. I'm blaming Keurig. Kroger. All right, so here I am a few weeks ago. I'm on the mic. I'm jonesing for the action. I want to get my people in the trade. So we run a scan. Here comes Keurig, or here comes Kroger. Yeah, daily squeeze, checks the boxes. Yeah, I'm gonna jump in and buy the grocery store. The day we bought Kroger, which is part of the XLP, guess where the XLP was? Ironically, where it is today, dead last place. I've just stripped myself of so much edge. Now I'm playing the game of I'm going to buy good-looking setups. That's decent. I want to buy great-looking setups in great markets in great sectors. The board would never, ever suggest we go buy an XLP name. The same week that I bought Keurig, or same week I bought Kroger, your top sector was SMH XLK. NVIDIA had a 30-minute squeeze. AMD had a 30-minute squeeze. Broadcom. They made for easier, more repeatable trades. So a lot of lessons learned. Looking forward to the next 100 trades. But all right, guys, a little bit of Q&A here, and then we Hit the ground running there tomorrow. Laurel MP. So yeah, I like chart requests because in like a tenth of a second, we should figure out is it bullish, bearish, or neutral. Now here's one cool thing. When we up the database here to 3,000 plus stocks, we can go to the main list. We can then search for MP. We maybe have it now. Okay, I'll make sure we have MP in the 3,000. Oh no, here we go. All right, say I want to see only Amazon. All right, there we go. Amazon's at 88%. Great weekly chart. 5-minute pretty good. Hourly pretty good. But for MP, doing it the old-fashioned way, I would buy that daily squeeze, but I would buy it on a white or a green arrow. How can I get a white or a green arrow? We need 3 more points. We're getting there, right? It's pretty good. We're right near the finish line. 3 more points, perfect score of 15, the white arrow. And again, the whole Mark Douglas thing, that will never give you a check every time. If every trade looks like that, every 25, 50, 100,000 you take, you're going to be in good shape. So I've just found if I find a 12 out of 15, I could throw a little bit of cash at it, or I could do nothing. I could wait until it's a perfect 15. Then I can throw more cash at it. That whole less trades, more size mindset. And I think I'm better off in the long run. Robert, yeah, we could definitely look into that. And yeah, Ron, so all the indicators are available on TradingView. The only exception being these watch list columns. The good news there, when we have the beta version launched and ready, the watch list columns will basically now be on your A plus squeeze tab and your squeeze radar. So that's great. You could be on TradingView, you could be on Tasty Trades, Fidelity. What else is there? Interactive brokers. This will give you all your squeeze action, which has been one of the thorns in our paw. Like this is my favorite thing, and it's only for toss. Now we can open it up. All right, let me go to the Q&A tab here. Hey, what's up, Chris? All right, if there's an A plus setup on the monthly chart, how far out do I put the trade on for? What if weekly or any other time frame? Yeah, Chris, great question. So I think is a good rule of thumb. Lean towards more time. So for example, if you think you can maybe hit your target in, let's go to Google. Google, for example. You can look at a lot of it through an average true range point of view. So for conversation's sake, if Google's average true range in the monthly chart is 20 bucks, and you're 20 bucks from your upside target, in theory, it can maybe get there in a month. I think you give it 2, 3, maybe 4. So I'm a fan of more time. If it's maybe something like, let's go look at this 30-minute squeeze here on the SMH. Now, that'll gap down tomorrow, but if it were not to gap down, 30-minute, that should get the job done sooner rather than later. It'll take a monthly squeeze way longer to break out and push towards your target than something like, say, a 15-minute or a 5-minute. Lower time frame, I'm thinking either 0 day till expiration or maybe a few days out. If we're looking at a daily squeeze, I'm thinking 2, 3, maybe 4 weeks. Bigger time frame, more time. But again, good rule of thumb, if you think it can happen in 5 days, maybe give it 10. Sitting through chop gets a little bit easier. Sitting through a pullback a little bit easier. I found that's really helpful. Our bow SW, can it scan for green arrows? Yeah, so that's exactly the goal here. They're working on that code in the background for the launch. But once it's ready, you can go to the main list. All right, I'm going to go to all. Reset filters. Here we go. You got your weekly column, your daily column. It'll show you in your columns who has a squeeze. So right now, for example, TJ Maxx on the weekly time frame, that says A+. And there might be a little bit more work to do here on the coding, but that's going to be the goal for the launch, right? You can go to, say, your focus list, right? I want to watch these names and across which time frames, who has an A plus squeeze, who has a neutral squeeze. And then we have the squeeze radar tab. That's your pre-built watch list, indices, sectors, Big 10 basket, and also your personal focus watch list. So again, that'll basically take what we have over here and it'll put that right there for us. And that streamlines the process of bull market, bear market, neutral, where's my best sectors, build out my focus list. Now, where can I go find that pitch? Because I'm huge on that. For example, for example, take something right now like pick a random name here, ROST. It might rank out really highly. It might be in a good sector. If I can't find that pitch, I don't have a trade there. So one thing I don't do is, find a bullish name in a good sector and then kind of manufacture a trade on the run. Remember, my original edge came from squeezes only. Compression, expansion, building up energy. Then we're tying in the 15 things. Now we're taking that picture, applying way more context. Indexes, sectors, relative strength, leadership. The squeeze is still an incredibly important part of that, though. So tomorrow morning for ROST, if they can give me a green arrow here on the 15, yeah, I might want to jump in and play ball with that. Not just because we have a squeeze and not just because it ranks out well. The combo. Total combo. Two trades. Another good idea would be to put a column next to each stock and a suggestion with action to trade, like a butterfly, put credit. Yeah, so okay, let me get my pen. That's a really good idea. Yeah, anything y'all can think of, literally. Like, you might think it's crazy. We'll see how crazy we can get. All right, I'm gonna write that down. And I know one thing I want to talk to them about is an implied volatility column. Then we're thinking, all right, bull market, best sectors, best stocks, squeezes. But if I find a really good squeeze and a really good stock and a really good sector, and the implied volatility is 200%, okay, I'm maybe better off doing a put credit spread, buying a butterfly versus a long premium strategy. My favorite trades are actually the opposite. Good market, good sector, good squeeze, lower implied volatility. Kind of feels like I'm the only guy watching it. I'm buying things nice and cheap. John calls it feeding the ducks. Find a good squeeze, low IV, you buy your calls, they break out the squeeze. The ducks come waddling. You feed them your contracts. All right, I'm going to buy in the squeeze for $2. Nice and quiet, nice and tight, low IV. They break it out and fire. You get the bigger than expected move. They pump the IV up. All right, I buy it for $2. The ducks come waddling along, and I'll sell them the call for $4. And it'll pull back eventually, brand new squeeze, and it's a beautiful, vicious cycle if you're on the right side. Okay, Clive, great question. So the time frames are the target for any given time frame is always the same. That'd be your green line. That green line measures about 3 average true range moves above your 21 period EMA. I can tie it together here good with Google. We'll do a few more questions here, guys. But Google on the monthly chart. Kind of a silly analogy, but I think it helps. Your 21 period EMA, that's your launching pad. The stock is your rocket ship, and the trigger, the alignment, the buy signals, that's all your rocket fuel. Once things finally take liftoff, they tend to get about 2.5 to maybe 3 average true range moves, 2.5 to 3 ATR above that 21 EMA. And you can change that. You can right click on it and say, all right, only show me, 2 ATR above that buy zone. But that's how I measure risk reward. I want to buy it as close to that 21 EMA as possible. The green arrow figures that out for us. Then I want to play for a push towards that green line. So again, here's the power, guys. And the beauty is you don't need the 70% win rate we've had. You're buying Google back here at a buck 70-ish, right? Buck 75. For a lot of our squeeze trades, we're wrong on a break and a close back below that launching pad. I'm long from a buck 70 and change. I'm wrong under, call it a buck 60. We take on about 8% risk. Push off the 21, breakout squeeze fires, goes towards your target. In exchange for 8% risk, we're looking at about 35% upside reward. And I think we can catch that and still have that same 70+% win rate, but the beauty is you don't need it. But if I'm buying Google up here at 220 and I've got a 230 target and a $170 line in the sand, that won't help out too much. Those rules apply from time frame to time frame. So if I'm going to look at the 2-day squeeze here for Tesla, I want to buy it where? On the green arrow, right near that 2-day 21 EMA. And then I'm playing for a push towards the 2-day time frame, third ATR. Over and over and over again. Yeah, great question there. Really good question. Hey, what's up, Hugh, for day trading? Ooh, okay, I kind of like that, Hugh. All right, now you're hitting me with good stuff. So Hugh says for day trading, what about an indicator of a squeeze for stocks trading over their VWAP? Hey, you guys are helping me out here. All right, I'm writing down that on my notebook. All right, Hugh, I'll see what I can do, but that's a good idea. I like it. All right, guys, let me check the futures here real quick while we're in the building. Yeah, so we'll see what's up tomorrow with the aftermath of the one they call NVIDIA. Pretty much within the expected move, so not the biggest fireworks. All right, guys, couple more questions here. We'll call it a night. Doctor says, how about percentage from the 21 EMA? It's another great idea. You guys are thinking of things I should have thought of, actually. So awesome stuff. Hey, what's up, Woodstock? Always good seeing your name. Once you selected a stock to trade, it would be possible to have AI select the top 2 trade strategies to obtain the best results. Example, yeah, Woodstock. Let me write that down, and then I will we'll definitely see what we can do on that front. And yes, the basic package includes all the indicators and the class coming up on Saturday. Yep. But all right, guys, I think we are pretty much good to call it a night here. So again, thank you for coming out. 3 webinars in 3 weeks is it's a lot of webinar action. But yeah, man, I'm excited. It's been I guess a 10, 12-year journey. Original Squeeze, Squeeze Pro, finding the 15 things, building the scoring system, the spreadsheet, the dashboard. And I think this is only going to be the beginning as far as what can we do with this. But all right, y'all, thank you again. Let me pull up the slides here one more time for you. And then, yeah, for those of you in the room, I will catch you tomorrow. I don't think it'll be a dull one, but we'll find out together, shall we? But all right, guys, again, so if you have the indicators from last year or previously, I either shoot the team here a message, you can give them a call, email customer support. If you log into your account, you should see your special offer. So check that out. And then again, for those of you who are a member of any of our rooms here, the basic package for $447, that is your Saturday class and all the indicators. Big 3 squeeze histogram, the big 3 buy and sell signals, the watch list columns, the scans, the entry label, the big 3 squeeze bars, all of your big 3 goodness. And then the pro package for $897, that's the classy indicators, a quarter of access to my live room, and a quarter of access to the beta version of that live dashboard. Non-members, basic package at $497, the class, all the tools, and then the pro package for $997, the tools, the class, the mastery access, and the dashboard access. But yeah, guys, thank you. You've given me a few good ideas here already. The VWAP one and the percentage above that 21 EMA. Kind of mad that I think about that myself. But all right, guys, thank you again. I appreciate all your time and effort. Thank you all for being part of our community here. Much, much appreciated. So thank you. Have a good night. Be safe. Take your dog for a walk tomorrow, and I'll catch you on the mic for those of you in my room for the Open. Adios, y'all. Thank you again. Yeah, time for a beans walk. See you guys.